afternoon, everyone. I'm very excited to be here today because I was born in France, but of Vietnamese origin. And so, obviously, I'm very happy to be here and to see what's happening in Vietnam in Fintech. And so I'll share with you about what I see about Fintech in Asia, but also what's happening about Fintech in general. And why the timing, I think, is right to talk about Fintech in Asia. So let me tell you first a bit about myself. So I've been in banking for quite a while, for more than a decade. I was in banking in London, where I helped to build businesses, first at SocGen, then UBS, and most recently I was a managing director at Citibank. But I wasn't born as a banker, actually. I started as an entrepreneur. So before banking, I was the CEO of UKB, and UKB was a big startup in the US at the end of the 90s, which had a lot of things right. We got a lot of money, very good technology, very good people, but what we got totally horribly wrong was our timing. Timing was horribly wrong. We did LinkedIn, but 5 years before LinkedIn. And I can tell you that being 5 years early doesn't help you. So that taught me a lot about timing. And so over the last few years, I thought that the timing was right for finance to be changed. So a few years ago, I started a blog called Disruptive Finance in London. I was very involved in the ecosystem of what happened in Fintech and helped entrepreneurs to build their startups in that space. I also helped on the education side at Oxford, where I am the resident expert. And after all these years, I found that timing was right for the second wave of Fintech to happen. And that's the reason why I left my job at Citi and I launched the Disruptive Group, which is a business builder. So we build businesses in finance. Let me tell you about Asia. In Asia, Fintech started a bit later than in Europe. What we call Fintech, which are all the startups in that space. A few years ago, I helped to build Fintech Hong Kong, so the biggest ecosystem of Fintech in Hong Kong. We launched an accelerator, which is called the Asian Supercharger. At the same time, we've been very lucky to have the Singaporean regulator, so MAS, to come to Oxford and talk to our students. And all of that has led to, for example, the Fintech Festival. Has anyone heard of the Fintech Festival in Singapore? So a few people, you know that the Fintech Festival that happened this week in Singapore is the largest event ever in Fintech worldwide. 11,000 people came to Singapore to learn, to discuss, to exchange, to build in Fintech. So there's definitely a big trend happening in Asia. So let me tell you about Fintech in general, and let's try to make it quite interactive. So it's not boring for you, it's not boring for me. Okay? So major changes coming to finance. I don't know if you're convinced, but I show you a few examples. What's happening in finance? This is the world 4 years ago in the US. 4 years ago, the most downloaded financial apps in the US were mainly banks. Who knows what is the most downloaded app in the US today? The most downloaded financial app? Anyone? Someone? Don't be shy. A guess? Who thinks it's PayPal? One person. Who thinks it's JP Morgan? No one? Okay, I'll give you. Think in your head and see if you get it right. The most financial downloaded app is Credit Karma. Who has heard of Credit Karma? Okay, 2 people have heard of Credit Karma. You should actually have heard of Credit Karma, because Credit Karma has 50 million clients. Out of 0 5 years ago, they have more clients than HSBC has, which is almost 150 years old. Credit Karma is a financial app that allows you as a consumer to have your credit score for free and to get free financial services in exchange. So a lot of things are happening in finance, but we don't really see them. I give you another example, and hopefully someone will get the answer right this time. You know the world of asset management, big world, $100 billion kind of company. Does anyone know who are the 3 largest money market funds in the world? Any name? One of the very, very large ones, any name? I'll give you the answer. Until a year ago, the 3 largest ones were Vanguard, Fidelity, JP Morgan. Today, the 3 largest ones are Vanguard, Fidelity, Alibaba. Alibaba did in 9 months what took more than 10 years for those large financial giants to do. So things are happening very, very quickly in the space, but we don't really see them. I won't even talk about the next example, because it's much more technical. But just trust me when I tell you that in capital market, also things happening very, very quickly. Here, not from startups, but hedge funds starting to compete with the very, very large banks. So from very small startups like Credit Karma, from very large e-commerce companies like Alibaba, to very large hedge funds or asset managers, all of that space is happening and changing very quickly. Only one reason behind: technology, of course. So before talking about fintech in Asia, let me take a step back and tell you about innovation in general and how innovation works, and perhaps it will give you some ideas in terms of what you could be doing. I think that there are mainly 2 types of innovations. The first one, very, very simple. There are a lot of services that you can see. You take one service, you do the same, you do it better, faster, cheaper, because you make a better use of technology and your resources. In finance, there's a name for that. It's called unbundling. That's unbundling of finance. So unbundling of finance means that for all of the services, for example, you like to, as a consumer, to borrow money, to invest money, to save, to have a bank, then for each of them, you have hundreds of companies doing the same thing, but cheaper, faster, with a nicer user interface. We've seen that before, and that is a much easier question. Who was born after 1980 in the room? Don't tell me there are only 2 people who were born after 1980 in the room. Don't be shy. Who was born after 1980? Okay, half the room. So for the people born after 1980, you might not remember that because you were not born actually, but that was called, the internet bubble. And the internet bubble, we saw that happening. It was exactly that. People, startups wanted to compete with a lot of things. Pet food, for example. Hundreds of startups doing pet foods. And then toys and vitamins and cosmetics. So cheaper, faster, nicer user interface. We've seen that. What happened? We know what happened. What happened is that for the consumers, it was very good. You had much more offers. You had much cheaper offers. But for the startups, it wasn't that great. For the startups, first you need to acquire clients. It costs a lot of money. And at the same time, you have very little margin. That's your business model. So in terms of business model, it's not great. It's not great. It's difficult. A lot of these startups disappeared. But actually, it's difficult, but not impossible. And how do we know that? We know that because obviously we have examples like Amazon. Amazon is exactly this example of a startup that started on one vertical, books, very, very challenging for them at times, but they managed to grow, and after being specialized just in books, they managed to do much, much more than that. So this process of innovation, if you're thinking of starting a company in that space, cheaper, faster, nicer, just know that in general, it's not easy, but that's typically a winner-takes-all kind of approach. First way of innovating. Second way of innovating, do something totally new. And remember this part because I think that will apply a lot to Asia. So do something totally new. How do you do that? In general, it's harder. It's harder because any process of innovation for us is difficult. If you had, for example, if you were this carriage driver and you had this nice carriage and this nice horse, what would be the easiest way to go faster? Very, very simple. You give some vitamins to your horse, you take some state-of-the-art wheels, and then you would have a faster carriage. I show it to you again, just to make sure you understand it. It's fine? The real process of innovation, obviously, is much harder. Creating the car is much, much harder than having a nicer horse. But that's what we're seeing in terms of real innovations, and that's what we're seeing in terms of what we call disruption. We see it in terms of disruption because for the incumbents, for the Nokia of this world, for the Blockbuster, or for the Kodak, in a very, very short period of time, 2 or 3 years, they were decimated. So if you're an old incumbent, when you have real innovation getting into your space, that can move very, very quickly. It doesn't take 10 years. It can easily take 2 or 3 years, which is Kodak or Blockbuster, for example. What's happening in terms of finance? What is new in terms of finance? I'm sure you would have some ideas. Anyone have an idea of what is really new in finance? Blockchain, very good point. Blockchain is definitely something which is new. And that was my first answer. Anything else? Blockchain was a very good answer. Anyone else? There's more than that. There's blockchain. Linked to blockchain is Bitcoin and cryptocurrencies. Is definitely something which is new. We've had lending and peer-to-peer lending. We've had crowdfunding, which is very new, which is getting money out of the crowd and not investors or VCs. Very, very good example here, which is Mondo, which is a digital bank that raised £1 million on a platform in a minute and a half. So things are changing very quickly. Quite funny also, there was one day, a month ago, there was a big headline on The Guardian in the UK, Admiral, which is an insurance company, to start pricing car insurance based on Facebook posts. So I saw that, and I just made a copy. I thought, oh wow, that's really interesting. And then 4 hours later, you had Facebook forces Admiral to pull plan to price car insurance based on posts. So exactly the opposite. So that's the process of innovation. It's not a linear process at all in terms of innovation. And then mobile money, which you know very well, that's something that has changed a lot, especially for emerging markets over the last few years. And just one thing for you to remember, which, if you're based in Vietnam, might not be totally obvious, I think, in terms of the data side. For a bank, how does a bank make money? Usually 2 sources of money. First, transaction fees. Sell a product, they get transaction fees. And the second part, which is interest income. Totally different from Facebook or Google that only make money from monetizing data. I think that will be a huge shift in finance. Finance owns a lot of data. Your bank has much more data than Google or Facebook. It doesn't mean that your bank will have to sell this kind of data, but there's much to do in that space. And I think that in Vietnam, that could be something interesting to do. So now let's talk about Asia and how Asia is different. It's very different, first, because the financial sector is totally different. And if you look at all these stats for Southeast Asia, you have those stats in terms of mobile penetration between the percentage of bank accounts. Percentage of bank accounts is in the 30% or so. In Europe and the US, it would be closer to 100%. But at the same time, the mobile penetration is at the same level or even higher than in the Europe or in the US. So that's very, very clear that the opportunity in terms of money is coming from the fact that all of you have one or more smartphones. So that's the... You like this slide?
Yeah.
So that's the first... So that's the first big difference between Europe, the US, and Asia. In terms of investments in Asia have exploded, which you can see here. they have so exploded that as of 2016, investments in Asia represent more than half of all investments in fintech. This is very biased, however. Do you know why it's biased? It's biased because most of that actually comes from mega deals in China. So almost all of these very, very large deals comes from deals in China and a bit in Hong Kong. So you're starting to have very, very large financing in that region, but there's no doubt, after what we see in China and Hong Kong, after the Singapore festival, where you had 11,000 people coming to Singapore to look at the opportunity in Asia, that a lot of things are happening in that space. What is interesting for finance and fintech in Asia is that when you look at the market, it's not the same market at all than in Europe or in the US. In Europe or in the US, almost everyone has a bank account. Here, I wouldn't say almost no one, but more than half doesn't have a bank account at all. And so here we're really talking about finance, fintech, helping not just to make money for an entrepreneur, but really to benefit society, to benefit the community, and that's really about financial inclusion. So that's one part of fintech where you see a lot of investments of people trying to offer services to people who previously never had financial products. But on the other end of the scale, Asia now is the richest part of the world. You have more high net worth individuals in Asia than in the US, for example. And so you also see a lot of fintechs addressing this part of high net worth individuals and offering these kind of products. So as you can see, it's a very, very spread in terms of the services that you can offer in Asia. I wanted to show you a prepaid debit card that I had, but I can't find it anymore, which is called Revolut. Has anyone heard of Revolut? One person, two people. Revolut is a prepaid debit card in the UK, was launched a year ago. I think today I have around 400,000 clients. What they do is very simple. It's a prepaid debit card. When you travel, if you go from the UK to Spain, you can exchange your pounds into euros and they won't take a fee on that. It seems quite simple and seems like a very, very good service for anyone. This kind of technologies, you have a lot in Europe. In Europe, people use the technologies of credit card, of prepaid debit cards, all those payment rails in a very standard way. I was talking to an entrepreneur in Hong Kong about this. I was talking to entrepreneurs in Singapore about this. It's much harder to do. Why is it much harder to do? Because the way we use money in general is very, very different. So the way you use money, for example, in the US or in the UK, which is this part, is a lot on the card side. So that would be quite natural for me to take my card everywhere. 50% of the people or more use cards and then digital and then other things. Now, if you go to China and India, it's totally different. Cash is still the most used way of paying. Digital is very, very high, actually. You can see that digital, for example, in China is much higher than the UK and the US, but cards is very low. So if I wanted to launch a startup in Asia, it's not certain at all I would want to use the same rails of prepaid debit cards, just because not that many people use debit cards. On the other hand, a mobile wallet is very rarely used in the US or Europe, but it's much, much more used in Asia. So I would say almost each country is different in Asia, whereas in Europe or in the US, they're quite consistent. So if you wanted to launch a product in Singapore, or Hong Kong, or Vietnam, or Indonesia, you would really have to take into account those local specificities. So here, that's what we're talking in terms of cards, and Hong Kong, Singapore, Japan, China, and India. You can see the behavior of consumers. And going back to my example of timing and consumers, I don't think that you can change the behavior of consumers. You can't say, in China, suddenly I will force people to use cards. You don't want to do that. you want to use what people already use. In that case, there would be, for example, a mobile wallet. So keep that in mind, because Asia, we tend to talk about Asia, but Asia is not one market. Asia is a lot of very, very different local markets. The other difference between Asia and Europe is that in Europe and in the US, you have a very, very mature financial infrastructure. So in the UK, for example, you are likely to have a bank account, you are likely to have a few debit cards or credit cards. You already have quite a few things. So if you say, I'm going to create something which is so much nicer than HSBC, and take all those clients from HSBC and move them to my super bank. You can try, but it's not that easy. I give you a stat, which is quite interesting. I don't know if it's true, but it's quite interesting. They say that in Europe, you are more likely to divorce than change bank accounts. So, I don't know if it's true. I never managed to find anyone who could prove it, but it shows that it is very difficult to get people to move from one bank account to the next, even if you're nicer, even if you're cheaper, even if, etc. On the other hand, when you're in a market where you only have 20 or 30% of people who have a bank account, it's not a question of moving them from something to something else. It's a question of offering them a service which they never had before. And that's the reason why how is it possible? Okay, so don't take a picture of this slide, because obviously it is wrong. Because you don't want to compare Paytm to ICBC, because obviously ICBC is in China, and here I think should be Alibaba or Ant Financial, and here I think should be Paytm and State Bank of India. But what you're seeing anyway is that there are huge e-players in Asia which are almost as big as the banks. Amazing. Much, much, much harder to do in Europe or in the US. And so what are the different opportunities that you have? So you have the opportunities, which is I will provide you something which used to be called a bank, but actually today it's mainly a payment service. So I will provide you with a payment service when before you didn't have any. Before you only had cash. Now I'm going to give you something in your mobile phone. Works very well, 400 million clients for Ant Financial. Then, if you start to move up the whole chain of finance, where are you? Lending, obviously. So here, again, it's not a surprise that the largest market for peer-to-peer lending in the world is not in the US, it's not in the UK, it's in China. And so here, peer-to-peer lending is humongous in terms of amounts. It's $100 billion in China. Here, I would argue that you should forget the part which is called peer-to-peer, because the important part of this wasn't the fact that it was peer-to-peer, that you could take money from someone and give it to someone else. The part which was important was that it was digital. The part which was important is that the whole workflow and the whole process was automated, which meant that all those manual processes in the past now could be made much more efficiently. And so since a lot of people didn't have access to lending before, now those people had access to lending through those platforms of peer-to-peer lending. So we went from having a bank account, having something that helps you for payments, having something on the lending side for retail, for us, consumers, and I think one of the opportunities also is SMEs. So SMEs is in general a space, a sector which is underserved. It's not a sector which is properly served by the existing banks. There's one very simple reason for that. The retail side, consumers, is a space which is highly automated, so everything is automated and it makes its own margin. You don't really have to touch it. The large corp side, so large corporates, large organizations, is not automated. It's all custom service. You have a person who would be talking to the clients. So it's very manual, but it's very high margin also. SME in the middle is not that great. SME is not automated, so it has to be manual in a lot of cases, but at the same time, it's low margin. So manual, low margin is not a great combination. But what we're starting to see is that technology allows you to do things which you couldn't do before. So all those manual processes before, now you can do them through technology. And that's why the fastest SME lender in the world, or in the US, is a company called Cabbage. And Cabbage is a company that does automatic lending by taking data from Amazon, PayPal, FedEx, etc., so that you don't need to have someone in the middle to do that. Why is it a huge opportunity? Just look at this graph. When you look at this graph, and the number of businesses, which is almost 100 million small businesses, those businesses are not being properly served at the moment. So we're talking about a huge market which can be automated and where we can use technology, to help them. And if you look at those figures, actually the biggest opportunity is not in Europe or in the US, because there's a much bigger market from the banks, but in Asia. So I gave you a few ideas of where I think some of the opportunities are in Asia. And I'll finish with the way I see innovation in general and where innovation is important in Asia. So we talked, you remember we talked about first way of doing innovation. Who remembers first way of doing innovation? Were you all asleep or? Okay, first way. What's the first way of innovating? Faster, cheaper. So faster, cheaper, nicer user interface. Take something that already exists and do it nicer thanks to technology. So that's typically this, which is thanks to a faster and cheaper, in this world, basically you can compete with much, much larger organizations than you. So that's this sumo picture, which I hope you like because it took me quite a while to find. The second way of innovating, what's the second way of innovating? So something totally new. So the second way of innovating is something totally new, real innovations. This, I think, is a huge opportunity in Asia. So that's a huge opportunity in Asia, just because you don't have to start from something already. You don't have to try to influence a consumer behavior, just because there wasn't any consumer behavior to start with. And that's the reason why you have this Alibaba of this world, those companies that can go from 0 to 400 million clients very, very quickly. So real innovations, I think, there's a lot of way of doing that in Asia. And the large part is, don't underestimate people coming from other sectors. Because what is finance? What is money? Finance is something which is very simple. It is just a facilitator of commerce. Finance allows you to do commerce more efficiently and faster. Finance today is very visible. If I give you, you give me an iPhone, I give you cash, the cash part is very, very visible. Finance is starting to be less visible already. When you take Uber, you get in, you get out, you have paid. Where's the transaction? You don't see the transaction anymore. So as finance becomes less and less visible, you might have less need to have a very, very visible entity for finance. And so commerce in general might start to integrate finance, and you are more likely to see other sectors trying to expand into finance because it's part of their business. And so if I were to take a step back and being in Vietnam today, I think we are now in the second wave of fintech. We saw the first wave of fintech in Europe, in the US, the last few years, and we've learned a lot of things from that. A lot of technology have been created, a lot of mistakes have been made also, a lot of money, $20 billion have been invested last year. So we know much more. And in Asia, and especially in Vietnam, I think we have a huge opportunity today. The opportunity is that we know a lot, so we have a lot of experience. There are a lot of very, very good people, so there are a lot of very talented people who have already built things in that space. Technology and infrastructure is very cheap. It's much cheaper